the big question mark is going to be like at what price, right? Where's price discovery in the absence of Albemarle's bid not being there?
I've had one person tell me, it might be low twos. I've heard some people say low ones.
And Liontown shareholders seem to think it'll be done at $2.70. Do you think it's in Gina's best interest to keep the share price high? I actually think it could be in her interest to have the share price go as low as possible. There's a big question mark about Gina's role in all of this and what's she trying to get at, right? 30th of June 2022, Hancock's cash and cash equivalents sat at a remarkable $17.8 billion. Call it a little over about $1 billion buying Liontown shares to get to 20%. And that's peanuts in the bigger picture of what the real end game is for her.
Righto, g'day Money Miners. Tuesday, 17th of October, and the day is here. Hope you've enjoyed part one of Rusty's chat yesterday about metal bifurcation. Absolutely. And we have taken the intro to the next level. Trav put the finishing touches on the text. It was fucking sensational. I was pinging in the bloody bathroom watching it, mate.
Matty, that was all you. That was a few hours of your good work, learning the tricks of the trade. You're
fucking a few.
You've mastered the jumbo now. You've taken to video editing as a new craft.
Oh, mate, today, we promised it yesterday. We're getting into the Liontown twist with Albemarle, Gina, and whoever else we're going to put in the speculation bag. And we're getting into the Dacian takeover by Genesis that has finally happened. They're the two big stories today. A couple other draw results out from Spartan that have and other stuff, but these are the two big stories we're getting into.
One is a previously foiled deal that is now completing, and this one is a proposed deal that's now been foiled. So what a bloody two really interesting ones to talk about. Serious stuff to talk about. So I'm excited, Matty.
There is, and there's a bit of an 80-20 inverted link that I'll link the two stories with too as well. Righto, let's get into it, Trav. Mate, sponsors for the day are great friends Langers and Bondi at Terra Capital.
This is the second time we've ripped this one, Matty.
I did one that even Trav wouldn't let over
you
the line.
You said bangers to start with, which is Bondi and Langers.
No, that wasn't the issue. It was around some form of financial advice that JD. I'm pushing the envelope now that JD's away, seeing what I can get away with. Maybe this will be in the uncut Money of Mine only fans. But for those who don't know, these absolute GCs at Terra Capital, they've got a natural resource fund. They're based in Sydney, heavily invested in the TSX. Look at a lot of global resource opportunities, not confined to the Australian geographic location. So absolute,
stellar returns, smart people. Pay attention to what they do.
Yeah. No financial advice. Thanks for your support, Terra, of Money of Mine. And shout out to, obviously, we can't forget Dylan Kelly at Terra Capital as well, who produced one of the greatest rare earth spectaculars on our podcast. So thanks, Terra. Right, let's get into it. First up, the Liontown twist. I don't know, is it a twist? You could see it coming, but Jesus Christ, the implications of what has happened might cost a bit of people a lot of cash. We'll get into it. So pretty much Albemarle announced yesterday, the big American downstream lithium producer and also part owner of Greenbushes, Wodgina, obviously the Kemerton plant here. And so they're in and around Australia, but they were wanting to take over Liontown for $3 a share. They were in due diligence and they have now walked away. You could really say as a subsequent event of Gina Reinhardt gaining 20% shareholding in Liontown.
Yep. It's bad news, really bad news. And a lot of Liontown shareholders, there's no price that's enough for them. So I think they've just got a lot of soul searching to do because this is going to bring them back to earth in a big way, unfortunately.
Bad news for Liontown shareholders. Okay, probably not bad news for Gina. Maybe. Don't know if it's bad news for Albemarle, but we're going to get right into it. So, look, and as we said, Gina's and how it's come about as Gina's 20% shareholding now pretty much had the power to sway the vote for the scheme of arrangement to go through, and we are, I guess, inferring that due to that part of the due diligence period, they got extended by a week last week.
Yeah.
Albemarle it looks a bit hard now.
So Albemarle themselves explicitly state that point. They quote, that one of the reason that they quote in their announcement is its decision to withdraw its proposal was due to the growing complexities associated with executing the transaction, aka the fact that Gina now owns 20% and you need 25%. But you need 75% of the votes, the people that vote to actually vote in favour. So Gina's interest there would block a scheme of arrangement, which is bad news for anyone wanting to complete a deal there. Clearly, Albemarle has given up on whatever conversations or communications have been between them and Gina's party, and it's too hard. So here's where things get spicy, Matty, because Liontown immediately go into trading halt. They've got a big funding gap to solve for, and that problem is here now.
And that's grown recently. There was some analysts were talking about it's up to about 540 million.
Yeah, so they've
expected to be needed.
They've gone into trading halt, and that sort of, I guess, prevents the opportunity for price discovery to occur in the absence of an Albemarle bid. And there's reports out from the AFR that that UBS are actually sounding the market for an equity raising here. A bit of a context. So 2.5 weeks ago, Liontown revealed to the market that the size of the funding gap had gone up, like you mentioned. This revelation happened during Albemarle's DD process, let's keep in mind. At the same time, Liontown revealed that they'd also sidelined DSO based on the current lithium prices, but this DSO may have alleviated some funding pressure.
I think it was about 90 million bucks or something. It wasn't.
It's got to be solved for now. That they said they're progressed with debt discussions for $450 million, but progressed debt. You never quite know how long that takes to execute. There's so many things you've got to tick off, and everything with debt. It's really takes a long time.
I think they had that sort of non-binding offers from like export credit agencies and like indications. So but nothing was
binding.
Didn't appear anything was finalised.
But heavily progressed. And then that capex hike saw some analysts sort of expecting about 540 million needed. There's varying reports on what that number is. As soon as they announced Albemarle had withdrawn, though, they're in halt, and there's this sort of overhang of an equity raising coming. And I think a really interesting question is going to be around if they're actually raising 300 to 500, and I'm not sure.
Is that US or Aussie trade?
It'd be Aussie, yeah.
Aussie, yeah.
If they're actually raising that, then the big question mark is going to be like at what price, right? These guys are wanting to hold at $2.79. Where's price discovery in the absence of Albemarle's bid not being there?
Because they weren't at this $3 offer. Remember what Liontown was before these numerous Albemarle offers come in. Remember there was numerous offers that weren't actually disclosed to the market at the time. They were disclosed at a later date, but that saw them shoot from below $2 up to that $3 mark, like that, and hence they're being, as Albemarle said, fully valued at that $3 mark. So as you said, now that this is off the table, and they're going to tap the market to potentially going to tap the market to sort this funding gap via 100% of equity.
I'm not sure if it will be 100% equity. They might, say they only raise 300 million equity, then they're banking on the fact that they're still going to get some more debt in there from this consortium of lenders, which seems reasonable.
So and as you said, analysts are predicting 540. So the higher end of that 500 million mightn't even cover it. So there'd have to be some sort of debt.
This is the second day of trading halt now, and we still haven't heard a single thing on the street about what price this is going to be at. And this is such an interesting question. I've heard serious people talk about insanely different ranges of what their offer price could be at if they do equity. I'm sure they're scrambling to try and figure out prepays, whatever, any potential funding options to bridge them in some way, shape, or form if there is an immediate funding pressure that's would avoid poor price discovery from a capital raising perspective. But the fact that it's 2 days into hold and we haven't heard a single thing about what the offer price is, from like an indicative terms perspective is unusual.
And as you said, numerous people, I've had one person tell me, it might be low twos. I've heard some people say low ones, like we don't know what the offer price is.
And Liontown shareholders seem to think it'll be done at $2.70.
Yeah, God, that'd be, it's going to be very, very interesting to see what it opens at. Well, you would assume the term sheet will come out before they.
Yeah, what the offer price is the key bit of price discovery news that I'm waiting for here.
Yeah, so I don't think there's any point spitballing that, Trav. Yeah. So, okay, I'll ask you this: why, if they're going to sound the market for up to $500 million, now that Gina's on the register for 20% holding, why wouldn't they go down a debt facility route and not go through the highly dilutive route? Remember, they raised $500 million. That could be, by the time the price drops, that could be well over 10% of the market cap. Nearly up to their maximum issue. Why wouldn't they go through like a debt facility with someone like Gina?
Do you think it's in Gina's best interest to keep the share price high? That's my question to you, right? Because if Gina gave a debt facility and kept, I guess, removed the need to do a diluted equity raise and everything like that, then I think it's a point we're going to get into a little bit further down, Maddie, but I actually think it could be in her interest to have the share price go as low as possible, just in terms of what her next plans are in this equation. So, yeah, if her intention was to foil the deal and then pick up the rest dirt cheap or cheaper, then why would she give them a debt facility now?
And would they want a debt facility off Gina after her essentially, you wouldn't say blowing up the deal, but with Albemarle, but just been a contributing factor, they might be a bit pissed off with her. And there won't be any short of, I don't think they'll be short of equity demand for the raise. Consider you're looking on the latest short data was that Liontown were 9.73% shorted on the ASX. So look, if you say it goes back to, $2 or below, that could be, what's that, about $400 million worth of shorts that would need to be closed out. So that'd go straight into the raise.
A huge portion of those shorts emerged because people anticipated what Gina was doing, and they predicted that the Albemarle deal would fall away, and Gina would sort of let the share price fall as a result. So those shorts were kind of basically shorting into Gina's buying, which is likely to turn out to be a pretty good trade if their placement's done at a steep discount here, and they've locked in a very positive return if they bid into that placement to close out the short.
Wonder how many of the Lioneers, as they call them, took their cash at $3. I reckon. Yeah, don't know.
It will be interesting. I noticed in the reporting of the West Australian that they disclosed sources close to Hancock said that Hancock would bid pro rata their 19.9% into a placement. But again, there's still no indications on what the pricing of that placement is going to be.
And then you just think of if it goes down a high proportion of equity, considering it, like say they raise 10% of their market cap through this equity raise at low $2 or whatever. Can't see it getting back to $3 much easier because it's even become even harder now if they go dilute the shareholders to actually get that price back to $3 for the retail punters or the minor major shareholders, not the big dogs, to get that value again.
Yeah. It's really bad news for shareholders. It's unfortunate. I think we should talk about, Maddie, what are the considerations for Gina here? There's a big question mark about Gina's role in all of this and what's she trying to get at, right? I think some of the takes that I've seen floating out there about Gina's role have been a bit off. They've missed the mark a little bit. There's lots of finger pointing going on, people calling Gina a baggie and blowing up her own investment. I'll flash up a couple on screen.
What's a baggie? Someone like a bag collector?
Like holding a bag that you bought high and now it's lower price. So you're a bag holder. So Stock Rocker goes LTR, oh dear, Gina, FOMO mode in at $3. Alex goes LTR, not going to produce a thing without substantial injection of capital, considering they were on life support in the mid $1 after real news dropped. Albemarle has every incentive to walk here and buy the big dip. Gina and Bianca have all the makings of late top buying baggy. So another baggy bed, and then twin turbo silica goes, did Gina just become a baggy? Hashtag welcome to Baggy Town.
Lots of baggy ones.
And there's a thread here. She just did another Vulcan. Gina, way to blow $200 to $300 million of your own cash and a billion of everyone else's. So I think this is a bad take. I know Liontown holders are upset, but I absolutely believe Gina wanted this. Here's what I think people don't quite appreciate when they think of the investment dynamics of Gina Rinehart at the moment. If you go back in time and look at the bidder statement that Hancock lobbed in its bid for Warrego Energy last year, there was this detail. It said, at 30th of June 2022, Hancock's cash and cash equivalents sat at a remarkable $17.8 billion. $17.8 billion cash and cash equivalents. So that's ignoring like debt capability that you have as well, right? Because so sure, all right, maybe that's like Gina spent what? Call it a little over about $1 billion buying Liontown shares to get to 20% or whatever she spent, a bit over $1 billion, call it. And that's peanuts in the bigger picture of what, the real end game is for her here. So what she spends on the first 20% is way less important versus the payoff from whatever seat she gets at the table for some long-term lithium vehicle business in Australia. She's wedged herself in here to demand a strong seat, be that in a joint venture with Albemarle, with MinRes, with both. We don't know the dynamics of what it is she actually wants. But Albemarle withdrawing here is largely due to Gina.
Primarily due to Gina?
Yeah.
Just due to Gina?
Yeah. Maybe DD was, maybe there's some question marks on DD too, right? We saw, bad news rinse through the market in that process. But Liontown have a funding issue. Albemarle withdraw. Share price falls off. If Gina wants to buy in a joint venture with MinRes, then now the other 80% is going to look a lot cheaper probably, and you can probably bank on her sitting there patiently as Liontown has to navigate all of the risk ahead as that project sort of, solves its funding gap, finishes construction, ramps up, and we know that lithium ramp up can be a timely exercise and things don't always go to plan. And she doesn't have to put a bid in through that period because with Gina at 20%, you really think anyone else is going to come knocking?
Exactly. It's sort of like the second story we're going to go into with Genesis and Dacian, but just time reverse. So Genesis bought the 80% of Dacian. Now they've paid overs for the 20%, but the overs they've paid for the 20% isn't a major factor in what they've paid for the whole thing. And this might be what happens in reverse for Gina securing her take in Kathleen Valley. Mm-hmm. So could go the same way. We don't know. But
the other scenario is if her intentions weren't a JV with MinRes, but if her intentions were a JV with Albemarle, which I don't know or think that they were, but if they were, then maybe that's harder now because you pissed off Albemarle in a big way. But I just I think regardless, she's got the upper hand, right? She's sitting there with 20%. There's no more bid on the table. It's all up to her now.
And there won't be any other suitors come in that aren't aligned with her because they know she'll just block them. Like she's done it already. They'd have to be aligned with her.
Yeah, and if she's bought shares at $3 and she sort of knows the dynamics of how this will all unfold, it's not like you can just put in a bid at a 50% premium and she'll accept into it. It means nothing to her. The gain on that, the capital gain means nothing. So it's not like she's a typical shareholder that you look at and are like, oh, I can offer a decent premium and they'll just accept because they make money because it's peanuts. It's just peanuts to her.
Yeah, well, she'll look like a genius if she picks up the 80%, the other 80% at $2.
Yeah, and I mean, she can just let it de-risk itself, and if more equity, then she just goes pro rata, or if the share price falls off, then whatever she has to pay in the ultimate long run is less. But she doesn't have to own it. She doesn't have to wear that risk as operator. She can let that happen under the Liontown banner in the interim. And there's still other factors to play out, are MinRes going to come into this and how does that look? And there's no real time pressure on any of that to actually happen now. If I were Gina and I were MinRes, I'd kind of want to see all of the risk process kind of happen under the Liontown banner. Now knowing that the corporate appeal to Albemarle's gone and that no one else can really take it over because Gina's sitting there at 19.9%.
Yeah, exactly. Now, before we get into the Albemarle side of things, Trav, Gina's 5% holding in Chalice.
Yeah.
Now, for those who don't know, Tim Goyder is the major shareholder in Chalice and was the major shareholder in Liontown, but is now the second major shareholder behind Gina, but still owns, I think it was 14 and a bit percent. So still a major shareholder. So was this 5% stake in Chalice, do you think, a strategic investment in Chalice or a strategic investment in gaining a bit of leverage against Tim Goyder with a broader, longer-term Liontown play like this?
I don't know. It's an interesting question. We saw when Chalice share price ran off, there were kind of these, Australians reporting that Hancock's sitting there at less than 5% and, they're vulnerable to a potential takeover from Hancock. Honestly, I don't know what her intentions are with Chalice, but it's sort of like an extra bit of relationship pressure or leverage you could think of when it comes to any discussions with Tim, I'm sure.
Yeah. Let's get on the Albemarle. So do you think is this the last we'll see of Albemarle in relation to Liontown and Kathleen Valley? Because look, Liontown could go to Albemarle and do a direct share placement for this raise, and Albemarle could easily get up to 20% holding as well to be a pain in Gina's side. But do you think after this that they'll be like, nah, too hard, we're done?
Sure. Why would Albemarle bother buying shares here? Because they end up back in the same position. They still are going to need Gina to agree if they want it outright. It might make sense if Albemarle kind of, settled for a joint venture with Gina, and then you've got two massive shareholders sort of needing an outcome from each other, sort of forced into a JV. But I feel like if that was an outcome that they would have settled for, we would have seen some outcome reached before they withdrew in the way that we've seen.
I think with $17 billion in cash, you wouldn't need to have a JV partner, would you, for something that's potentially she might get now for $5 billion?
Yeah, I'm sort of in the camp that Gina might not necessarily need Albemarle. I'm not entirely sure how the permutations work out. With obviously there's going to be mining and there'll be the downstream processing, but you look at the rhetoric out of MinRes now, and they're talking so much more about the upstream stuff and taking steps to be removed from the downstream. And I think maybe that will be the specialisation that sort of emerges in the Gina camp as well. Obviously, there's going to be agreements for the product and all the rest of it, which requires the upstream stuff to go downstream. But do you have to do it in a joint venture? Albemarle needs the security of supply, and I think the bolder position for anyone who thinks the rocks are king is to hoard the rocks unencumbered by the downstream owner.
And most of the offtake has been secured for Liontown out to 2030, isn't it? With Tesla and Ford. I think there was some still available, so it's not like they need. Mate, as I said, everyone's begging for fucking lithium. It's not going to be hard to find someone that wants it. Mm-hmm. So I don't think because if you think of MinRes's JV with Albemarle for Wodgina, MinRes didn't have the capital capability back then when they did that Gina Reinhardt has right now.
Yeah.
Which would have meant that they would have been much more in need of a JV partner, whereas Gina Reinhardt's got, as you said, $17 billion.
Yeah.
I don't think she needs one.
Well, you can see the logic for Gina to partner with someone who has underground mining expertise or logistics expertise. I mean, she obviously has got serious expertise when it comes to Roy Hill, but there's iron ore is a different kind of mining than when it comes to the the chemical processes involved in lithium, right? So I think there's a degree of technical expertise which you could leverage in some sort of joint venture with someone who's got lithium mining experience. It's a different skill set.
Or you just recruit.
Or you just recruit.
And pay him top dollar.
Totally. But yeah, I mean, there's another question, Matty, and that's what does Albemarle do from an M&A perspective? Assume that they're out and they're out for good. They might come back if things change, but assume they're out, right? I'm going to read a sentence to you from Albemarle's announcement. They say planned expansion to deliver volumetric growth continue to progress across the company's global portfolio. Albemarle's capital allocation priorities remain investing in high return organic and inorganic growth, maintaining its financial flexibility and investment grade credit rating, and funding its dividends. So I read that and it looks like they're going to be hungry for other developers or producers, because they've got these volumetric growth plans, right? And so you take Kathleen Valley out of the equation. What could Albemarle turn to? Well, it's further down the pipeline from just a construction production perspective, but they've got a 12-month standstill with PMET at the moment. I wonder if they'll be nervous if someone did a Gina to them on that one. And then we also know Sigma is for sale. That's producing right now. Does Albemarle look at that? I don't know. But yeah.
A bit closer to their stomping ground.
Yeah. I'll be curious to see. I mean, Albemarle's been super just aggressive from a certain perspective of trying to acquire or be invested in these upstream operations. We've had some punchy words from Joe Lowry on who doesn't rate their mining capability at all because he says it's non-existent. They don't operate Greenbushes. But
from Brazil, though, between Sigma and then Latin Resources as well, they could secure a lot of supply out of there if they did look at that.
Yeah,
that region.
I'm not fully across where their volumetric constraints are, because it might be linked to the downstream facilities in certain areas, and that might restrict what they actually will be looking for. But regardless, it's an interesting question for the people who know the company Albemarle is like super closely. Like, what do they do now? What are they doing?
What's the takes from the brokers, Trav? What's the head honchos of the research industry saying about the deal?
They're getting the downgrades roll in, Matty. It's interesting to see. I saw Kate McCutcheon at Citi. Her downgrade was the first one I saw rolled through. She put a sell with a $2.30 price target on it. Quote from her.
You mightn't get a chance to sell it higher than that.
Yeah, yeah. So she goes, we think a counter offer is unlikely to come from Hancock given offtakes are locked up till 2030 and project ramp-up risk. Goldman Sachs, so Hugo there, slapped a sell on it. His price target's $1.85. Goldman, of course, have a notoriously low-end, long-term spodumene price, but to get to that 185, he's bolted on an M&A premium onto that valuation and price target. So Hugo says Hancock, having built a 19.9% stake in Liontown, may be a barrier to other future potential acquirers. We're getting a common theme here, Matty. And credit to Jarden. They actually went underweight in their recommendation on the 29th of September, citing the exact risk that we've seen emerge here. They said, if the scheme fails, we view Hancock has sufficient interest to decide its next steps in its own time. Jarden sum of the parts valuation of Liontown is about $1.56 per share.
Jeez.
And there's also a take from Twitter I thought was worth sharing. The initial tweet, and then there's a retweet. So the initial tweet is from Mondi Invest. He says, massive news in lithium M&A, Albemarle not proceeding with Liontown following their 4-week due diligence, and Gina throwing money around. What happens next? Well done to those who sold into Gina at $3 per share. Respeculator has retweeted this and says, wherever this deal goes is, but I'd point out one fact. Pilbara, PLS, is an $8.5 billion enterprise value with a proven shallowish open pit DMS/float operating mine with decades of life. Liontown is a $6.5 billion EV underground float development project. One is way overvalued in my books. What the fuck is Gina up to?
Gina. What is Gina gonna get up to?
Yeah. So, and I think that's a fair point, right? Like the relative valuation between Pilbara and Liontown has been sort of startling for ages. And yeah, that's why the price discovery piece of a capital raise is so interesting in my mind. because I don't know where price discovery is, but I'm really, really curious. I'm really, really curious. I've never seen something like this, mid deal where value could potentially just fall off really, really quickly.
You wonder if Liontown took any of the earlier offers from Albemarle, which, well, I remember were around $2.20, $2.30 or something like that. You wonder if they took those deals, if this same process would have played out with Miss Reinhardt, considering it was, numerous months ago.
Mike, yeah, it's a fair question to ask. I guess the other perspective is, like, at what point do you think Gina's interest in the project was expressed? Because it might have been expressed in the midst of those other bids somewhat privately. And if that was the case, then, yeah, maybe you feel more confident in rejecting the offers along the way.
Right, next story, Trav. Dacian. So Genesis have put forward a proposed takeover offer. So look, it's finally happened. Now this first started way back in July 2022. For those that don't remember, and Genesis are now going to acquire the remaining 20% shareholding of Dacian via a binding bid implementation deed. So let's set the scene. As we said, Genesis put in a takeover offer back in July 2022. It took them till February 2022 to get 80% holding. In that period, we had Kin get involved, you had Delphi get involved. So as I said, Genesis own 80%. Kin Mining owns 7.34% of Dacian. The German Delphi Group, they own 3.22% of Dacian, and they also own 41% of Kin. So effectively, it's this Delphi and Kin, mostly Delphi, wedged themselves in there. So Genesis could not get to the 90% compulsory acquisition level of Dacian.
100% right.
And then it was just left untidy. Genesis didn't have ownership of all the Mount Morgans. There was still the Dacian company still existed. It was just untidy. Now it's been tidied up, you'd say, Trav.
Yeah.
Proposed to be.
Yeah. The Kin German kind of consortium caused a bit of havoc last time around, and not a great outcome for Genesis at all, because it basically restricts the optionality you have with all of that infrastructure that Dacian has, be it both the deposits and the mill, because you have to operate in a sort of way that doesn't advantage the interests of Genesis above other shareholders. And that's a really complicated and frustrating thing to have to do when you want to maximise your optionality by sending certain feed here and utilising this mill there. And
so you can't, effectively, they couldn't say go to the Jupiter resource and send that to Gwalia, because that's not in the interest of Dacian shareholders, because you're not utilising the Mount Morgans mill.
Well, they could do that, but it would have to be in a form of arrangement. There'd be all of this tolling and all that sort of stuff agreement. And you'd have to be able to demonstrably kind of stand behind the fact that that was a decision that was in the best interest of the other Dacian shareholders, not just Genesis.
Yeah.
And all that stuff is a real fuck around to have to do. It's just easier and way simpler to have the optionality to own it outright, and also save on all of the other crappy overhead. You've got to pay for listing fees. You got all that stuff sucks, and it's just it'd be incredibly frustrating to have to navigate. But yeah, this is basically a bid to get rid of all of that complication.
Yeah, which was the intent at the start. It's just they wedged themselves in. So okay, look, last week before this happened, Dacian were trading at 12.5 cents. So Genesis's offer was, so it's 0.1685 Genesis shares for every Dacian share held. So implied value 23.5 cents. So 88% premium to that last closing price. But with a Genesis deal, Trav, there's always a bit of something clever that I think it even impresses you, mate. I reckon you like this sort of stuff.
You want to see a bit of structuring. It's good to see some clever structuring going in. Because the big risk is that you do this takeover bid again. Imagine how silly you look if the Germans can hold out again. You're like, bloody hell, it's 2 times we've bloody failed. So they had to throw in a bit of a carrot, and they had to dangle that carrot and ensure that that wouldn't happen. It's a pretty intriguing mechanism to ensure the Kin and the Germans bit, Matty?
So the carrot is, so if Genesis gets to a minimum of 95.1% interest in Dacian or once people start accepting, the offer would be improved to 0.1935 shares instead of 0.1685. So per Genesis shares per Dacian share. So that puts it up to an implied value of 27 cents for Dacian. So that's 116% premium to Dacian's last closing price. Essentially, this is the carrot to ensure both Delphi and Kin accepted the deal.
And it worked, mate.
It worked.
They've
both accepted today.
They have accepted today. And you might be wondering, why add a kicker if at the specific number, 95.1%, it's a strange number, you might be thinking. It's because in a takeover, Genesis need 75% of the Dacian shares they don't already own to vote for the offer in order to move it to a compulsory acquisition. That's 75% of the 20 it doesn't own equals 15%.
So 80 plus 15 is the 95.
It's the 95.1 threshold. And yeah, Kin accepting into the deal has turned their $10 million into a tidy 24 million in 12 months, which hence their share price is up 30% since pre-announcement.
Not a bad little play there for Kin.
Yeah,
and we will get into them. So look, you'll see in Dacian's wording that this deal implies a total equity valuation of Dacian at that offer price of 328 million, but it's technically correct. It values the company at that, but
I think it's silly.
It's not correct.
No one's going to pay $328 million for 100% of Dacian. It's just a silly. Would you pay? You know what I mean? Like that. It's just yes. Like it's not like Genesis have even paid that. They picked up 80%. A lot cheaper, and
yeah. Well, they've effectively paid 63 million for this remaining 20%. In these are in Genesis shares, so but if you put a rough implied valuation, 63 million. Remember the initial deal was at 0.08 Genesis shares per Dacian share. So it's about nearly 2.5 times that amount of shares now in this deal. So that was implied at 10.2 cents at the time. So I guess back then the implied value for all of Dacian was 111 million as the equity value. But that's Genesis share price has gone up a bit since then, and so has Dacian. So it all gets confusing there. So look, a rough thumb suck. Now this is a rough thumb suck. This is probably out of your comfort zone. This is
Matty's Excel spreadsheet.
This is my way of understanding which doesn't conform with the finance world, but Trav's letting me run with it. You could say if you based on what they've paid for the 80% worth of shares in Genesis shares plus the remaining 20% at this much higher value, they've effectively in script paid about 150 to 170 million for the 2.9 million tonne per annum mill and all the Dacian ore bodies. So it's all thumb suck. They haven't paid 328 million, which is the current value. They've paid, well under probably half of that. So that's where we link it to Gina. Gina's paying a premium for this 20% to now gain control, but now she's got control. That share price could slide and she might get the other 80% for a lot cheaper. So I think she's not a bag holder at all, I don't think. Pretty smart play, I think.
Yeah, time will tell on that one. But nice work on the thumb sucks, Matty.
Does it pass in terms of agricultural finance, that'd have to be up there, wouldn't it?
Yeah, pretty agricultural. I mean, we're talking dollar terms and it's all in script and those share prices fluctuate a lot and all that sort of stuff. But yeah, thumb suck, okay. Yeah, I'll pay the thumb suck.
Yeah, so that's why I had the 20 million gap in.
Yeah, exactly. margin of error. We're a day in and it's amazing, right? Deal announced yesterday and we're so close to compulsory acquisition already. This is it's record timing for a deal to be done. It's fascinating. So the Kin and the Germans, with them accepting into it. On my numbers, we're at 93.6% interest. So wouldn't be surprised to see the threshold has actually been reached from other shareholders who might have accepted today as well. And if that were the case, you'd go from announced deal Monday, compulsory acquisition level Wednesday. We'll see if it actually happens. But yeah, that's a pretty short timeline to get
Helps
the
when you got
compulsory
80%
acquisition.
already.
It does, though. It does. They still needed to get the 15, but and there's not too many shareholders left. And it's fascinating too, Matty, because in doing the homework for this one, we wanted to talk about the strategic rationale, right? And the main one that we've talked about in the past is Tower Hill. So, you know, in your words, kind of how does Mount Morgans and Dacian kind of enable Genesis to monetize Tower Hill?
Well, everyone's been talking about the king of the hill, Red 5, getting whoever gets control of that big 5.5 million tonne per annum low cost operating mill is the sort of the key for consolidating the region. But now that Genesis have tidied up this and gained control of their 2.9 million tonne per annum Dacian mill, they've got their 1.4 million tonne at Gwalia. Having that Red 5 mill now isn't as necessary. They've got a base case scenario now where they don't need that mill. They can send the Tower Hill ore to the Mount Morgans mill, or they can send a bit to Gwalia, a bit over there, because Gwalia will be anticipated by the time Tower Hill comes online. Gwalia will be getting filled up with Gwalia and Ulysses ore and the Admiral open pit as well. Tower Hill can go to Mount Morgans. They've got the Jupiter pit out at from the Dacian tenements. I think they've got the Redcliffe one that come out as well. So now they've got control of the Mount Morgans mill and the Gwalia mill. Needing that King of the Hill mill isn't as it'd be nice, but it's not a necessity. They've got a base case scenario that works now. And remember that when we were talking about needing King of the Hill and Red 5 were trading at like between 15 and 20 cents. Now Red 5 are trading at, I think they closed
32.
at 32 at over $1 billion. So instead of Genesis having to pay, say, with a premium 700 mil maybe 3 or 4 months ago, now they'd have to pay at least 1.3 billion for Red 5, and we'll get into Silver Lake having their little 10% kin-style stake in Red 5 now. So that's my...
and I'm sure Genesis will be keen to talk to the market about the fact that there's the base case without the King of the Hill mill now, because you've seen the articles roll through incumbent media who kind of talk about...
incumbent media, I like that.
They talk about a deal to be done, a deal on the cards with Genesis and everything like that. And I think, I haven't done the... If the Red 5 share price is including some sort of takeover premium built in there already, I think Genesis will be keen to talk to the fact that they don't need that, so that whatever premium might be there is eroded, and then if they actually wanted to embark on the consolidation of it, it's done at a more favourable merger ratio where there's less more retained for the existing shareholders in a future consolidation story. But.
And you do look at the map, like as big as the Red 5 mill is, it's the westernest mill. Like it's further away from everything. Like everything, all the high grade stuff in that region could go there and supplement, what's coming out of King of the Hill. Sure, it'd be great, but they got the case at the moment where they've got mills on either end and deposits in the middle. So
and that Tower Hill though, it's still going to take a couple years for it to actually come online, right? It's not
the big thing about that is it sounds like it's got great potential as an open pit, like good grade. I think we'll go through it later. 1.8 gram resource for a big open pit, but they've got to move a rail line for it. And it's not like, I don't think you just move a 100-metre section and just divert it around. Like, I think it's a pretty kilometres worth have got to be diverted around. I think they can start a portion of the pit, but for the full design or the full pit to be excavated, they need to have this rail line diverted. So, local authorities to deal with and a high cost to do that, I'd imagine. So that's why that timeline, that 2 to 3 years, is a thing.
Gotcha.
So.
Then there's another one. I was looking at Dacian's sort of portfolio of assets, and Matty, would you believe I'm disappointed that we didn't predict this deal a couple of weeks ago, because 2 weeks ago we
just didn't read this bit. That's why we would have predicted it.
We would have
got a double.
So 2 weeks ago we spoke about Genesis's pre-quarterly announcement where they talked about the cash and production. At the same time, Dacian announced that it had received final mining approval for the hub deposit at Redcliffe. So on that announcement, you scroll to the bottom of the announcement, there's an appendix, and there's some key terms in the deed between Dacian and the Commonwealth. They clarify in that there's a change of control clause in the deed that says Dacian must seek written consent of the Commonwealth prior to a change of control. They then include this one sentence. They clarify the deed recognises that an increase in the voting power in Dacian held by Genesis Minerals Limited will not be a change of control for the purpose of this clause. The information was there, mate. They were bloody clarifying it for shareholders. So clearly
handed it to us on a platter.
There was a deal on the table, but he just didn't read far enough on the announcement. The reason I bring it up is because I think this Redcliffe project matters, this hub deposit. I think it's part of the rationale. You can bring it up on a map here and you can see what I'm talking about. Redcliffe, this is the package that Dacian picked up from the merger with NTM when they merged in 2021. The hub deposit has a bit of a modest high-grade deposit within there. Flashing up on the screen, the total mineral resource, and there's ore reserves there as well. The hub deposit is the one to kind of focus in on. There's a mineral resource at hub of 1.7 million tonnes at 3.1 grams for 168,000 ounces, and there's an ore reserve there of 580,000 tonnes at 3.4 grams for 64,000 ounces. So it's not much, it's modest. There's a bigger, broader resource there, some of which might be able to be monetised as well, but it's the high-grade stuff everyone always sort of hones in on. And when you think that Mount Morgan's mill is on care and maintenance, approvals have come in to mine at Redcliffe, surely when Genesis and Dacian merge, given there's approvals and given there's a reserve, hub just goes to Gwalia, right? And I imagine this is a driver behind doing the deal now as well, because otherwise, like, if hub is able to be mined now, how do you actually pitch to shareholders of Dacian, other shareholders of Dacian other than Genesis, that the right thing to do is to send that deposit to Gwalia? They'd be like, no, send that to Mount Morgan's, right? Which
is on care and maintenance.
Yeah.
So Gwalia mill's spinning right now.
Yeah. So
and needs feed.
Yeah. You just have to have an additional process of an additional arrangement, all that sort of stuff. So I wonder if the desire to send hub to Gwalia and could actually be part of the rationale of doing a deal right now as well. Yeah.
And it doesn't force the Mount Morgan's mill to be turned on earlier than necessary, and that's a key thing. They just stripped a bit of equipment there. They'll have to put back to take to Gwalia. So,
mind you, I looked through the bidder's statement and everything like that, and it wasn't there wasn't any point in the rationale or synergies that talked about sending hub to Gwalia. This is purely my hypothesising, Matty.
So it's pretty much right, Trav. Guaranteed to be right. Mate, why were Genesis so shorted?
This is interesting. I don't know if you saw this, right? But
they were like you up in the top three shorts for a while
number
there.
two. It's like they had massive short interest on Genesis. They very recently got admitted to the ASX 200, and then you saw short interest massively spike. Second highest. It was about 10% short interest. A few theories why. One is one of them is just like, okay, there's a bit of an outlook that because when you get added to the ASX 200, there's a lot of programmatic buying of the stock that happens because you got to get added to all of these, indexes, and that means ETFs have to buy you. And some people bet on the mean reversion of that. So, you counter trade the ETF that bids you up and bet on a bit of a mean reversion. And another thing I've heard is that some people pitching the short trade were talking about anticipating a poor quarterly that shows that Genesis is sort of overvalued, on a relative basis. And I still couldn't quite figure out the super high short interest, even factoring in those two. Of course, the pre-quarterly that came out sort of showed a relatively positive quarter on balance. So that one's still a bit of an interesting point for me, Matty. I've been asking people around what they think of the deal, and there's been a few different perspectives out there. Some people I've spoken to are not happy. They think that that the consolidation story that's going to unfold in the Leonora region now, there's a bit of a precedent to say that that Genesis might kind of ultimately fold and pay up if anyone that kind of wants to withhold and stand out. So you could think of Silver Lake with their wedging position in red, right? So some people are unhappy there. Others think it's about time. Glad to see it all cleaned up and simplified, and the logical thing to happen. There's a hefty premium paid, but it's only on the 20%, not the other 80%.
I think they, well, I suppose they didn't have to pay extra for the Leonora thing. They just pulled forward what was it? It was the Tower Hill contingency, wasn't it?
In the Silver Lake example. Yeah.
And they were like, on script on those deals, Silver Lake looked like it was a more premium deal, but based on Silver Lake's share price now, it was not a premium at all because they've declined a lot since then. So, what about other juniors in the region, Trav? Like we talked about Kin.
We love talking about the Leonora story, mate, and I think I'm curious. You've got a spivvy or flashy looking map here that shows all the options in the region. Now,
I forget who I nicked it off one of the juniors.
Yeah, so. I looked at I saw Kin wedging themselves into Dacian and thought, Kin are just trying to get wrapped up in the whole consolidation piece. They've made a good buck on their investment in Dacian, but this now kind of cleanly separates Genesis from Kin. So so it adds a bit more, like it's not so clear that Kin gets acquired by Genesis now. But looking at what they've got on offer there, Matty, do you think Kin could be a future takeover target in the long run for the whole, Leonora consolidation story?
I think Kin want to be based on the history and I guess if you combine wedging themselves in this Dacian scenario, they haven't. Last feasibility study update I've found from them was 2019. They've got a heavy language in all their presentations and reports about merger and consolidation in the region. Look, they appointed a business development executive in the June quarter last year, Nick Anderson, who has, as they quote, a wealth of experience in corporate transactions, mergers and acquisitions.
I think the MD got bumped recently and someone else came in.
Yeah, that's when I think that's when Rowan Johnson come in, and then Nick Anderson come in as well. So look, that Cardinia, their flagship project, this Cardinia project, it's 43 kilometres from Gwalia. So it's the resource it's 1.5 million ounces at 1.27 grams gold. But it's contained within like 17 different ore bodies if you look at the mineral resource estimate. So like in contrast, you've got Tower Hill, which is Raleigh's little pet project. That's 1.2 million ounces at 1.8 grams. And then what did you say? I think the Hub, Hub Redcliffe, combined was about 1.5 grams. Right. I think the total mineral resource. So look, this one's a much lower grade, definitely ounces, but at that grade, would you truck at 43 kilometres to Gwalia when they've potentially got higher grade options to put in there to supplement that mill? Don't know. Don't think so.
Yep.
I think they'll enjoy their $13-14 million profit, but I don't see them getting interested. That's my first take.
There's two more to talk about. Red 5, obviously, we've spoken about to death. Silver Lake recently wedged themselves in with
wedged the key word.
They bought a stake, which is very Kin-esque, but Kin bought their stake amidst a live transaction. This is Silver Lake bought a stake before there was a bid yet. But amazingly, Red has a $1.1 billion market cap now. That's versus Genesis's $1.6 billion market cap on a pro forma basis after the Dacian deal is all done. The benefit of King of the Hills, I guess there's going to be if they were to kind of get this deal across the line with Red in the future, then of course there's that juicy big 5.5 million tonne per annum plant.
So they could effectively turn Gwalia off and send everything to King of the Hill. Like that's what the benefit would be. You've just got a massive 5.5 million tonne. You can chuck your high-grade feed in from Gwalia, Ulysses, keep mining the open pit at King of the Hill. You'd have stocks coming out your arse. You wouldn't even need to run Gwalia.
Yeah, okay.
That's the benefit I'd see.
Yeah.
It's just much more efficient to run high-grade through a 5.5 million tonne mill than trying to supplement a 1.4 and try and feed that 5.5 with the lower grade King of the Hill material. So, but as you said, based on the valuation, if they have to cough up 1.3 billion plus for it, and with Silver Lake in there, they've got the base case that they don't need it. So yeah, can't see that happening anytime soon. Maybe, but maybe if they didn't do it when it was half the price, I don't think they're going to do it now while it's double and still going up on a higher gold price.
Yeah, then looking around the region at some juniors.
Not financial advice, everyone. So by the way,
there's you got Saturn in the region. They got a deposit which
raised a bit of coin yesterday.
Yeah, I think they did raise a bit of coin yesterday, which is probably why it got my attention. It's like one of those low grade ones. And
theirs is the Apollo Hill. That's a proposed heap leach operation. Like based on the map, did a bit of Google Maps couldn't find it. But that's about 50 k's from Gwalia, about 90 k's from Mount Morgans. But look, 1.8 million ounces at 0.54 grams per tonne. So very, very low grade. But as I said, it's a heap leach operation. Benefit of that is they don't have to have like a ball mill to crush it down to 150 micron or anything. They only have to crush it to about 8 mil. So that's 8,000 microns. So a lot less power, lot less energy required, a lot less crushing capacity. And even though it's a 1.2 to 1 strip ratio, it's still half a gram. So, and they're targeting 10 million tonne a year to go through that heap leach. So I couldn't see it feasible to truck half gram dirt 50 k's to Gwalia. And I don't think I'd see Genesis looking at someone like that, or maybe someone else might, but I definitely couldn't see Genesis looking at that and building a additional, because even though it's heap leach, it still needs a primary crusher, a secondary crusher. So it's got 2 crushers. I think it's got a high pressure grinding rolling thing, HPGR or something. Then it's got to be leached. Then it's still got to go through all your adsorption tanks. So the leaching puts it into the cyanide solution, but you still have to have all your adsorption leaching tanks and your eluate and all that. So it's still a decent build. I think it was a few $100 million or something pre-production capital. So
gotcha.
Yeah, don't see that sparking the interest.
Right on, mate. Good segment there. We've talked to death about that one.
Good to have a bit of Leonora back in money of mine.
Yeah, we're gearing up for the Battle of Leonora 2.0. So this is probably signals that there's some time for that one to plan out. But
cheers, Mr. Finlayson, for getting us back in the game. I'm sure he's so thrilled we're talking about it.
I can't wait to see what Silver Lake do next as well, because their hat's in the arena now too. So,
well, what do you think they're going to do?
I don't know.
Do you think they're just going to maybe they'll just take Red 5?
Maybe. Yeah, mate. I don't know. Will they?
Well, if you look at their, I guess, depleting reserves at their other operations, Sugar Zone on care and maintenance, they've got, what have they got? A few $100 million in cash.
Yeah,
200, a few hundred. So, look, I'm sure they can put got 10% of red already.
Can they afford red? I mean, I think they've got comparable market caps now. It might be the other way around, but yeah.
Oh, it'd be what did you say? Merger of equals.
All right, mate.
Anyway, a bit of news. Other news for today. We'll rip through it. Mr. Mark Creasy.
Yeah, it's from today and yesterday. This combined news. Things to talk about that we don't have time to go do a deep dive on.
What have we got? Creasy adds to his Azure position, bought another 16 million shares on market, so can't get enough of Andover. Remember, he's got 40% of the project himself, and I think it's a 13% stake, and that 13% has just gone up a bit, marginally.
Yep. Polymetals, they put out a restart study on the Endeavour silver, zinc, lead mine in the Cobar, Matty. 10-year mine life, 78% IRR on a post-tax basis, and a $144 million NPV at 8% discount rate.
It feels like the more studies you do and the more work you put in between the studies, the IRR keeps going up. That work like that, doesn't it? Like, you just chuck a bit more capital in between studies, and then then you do a new study, you got a better IRR.
That's very true. This case though, they acquired it relatively recently, so I don't think they've thrown much of their own capital in. But yes, you're 100% right. If you do an updated study halfway through construction, of course, your economics going to be way better because you've now got a huge portion.
We've got AIC,
Yep.
ticker A1M. They come out with their quarterly results. Stock jump 15% today, Trav.
Record quarterly throughput, LOEs showing cash flow positive mining, and the proceeds that they're putting into the Jericho. So that was an interesting one. Spartan, ding, ding, ding on our front. We own the stock, but it's down 7% on a new discovery. So fascinating how that works.
It has been rallying a lot leading up to this announcement. So it's crept up to about 42 cents down. Yeah. So it was trading about 41. I think it just cracked 40 cents a Savi. So they highlighted some new areas under the Gilby's pit, and there was another area also 10 metres at 20 grams from 96 metres, 1,600 metres from the Never Never deposit. So bit of plans for growth there.
And then you got another drill bit hit. This was Lunnon Metals, their nickel play, Cambodia region there, 14 metres at 4.13% at nickel at Foster South. So share price fell on open but closed up 8%.
Question without notice, Trav. I know you love these with Spartan.
Yep.
Now that they've highlighted these additional areas, I think they've still got, I think it was about 30 million bucks in the bank. Do you reckon they're going to raise?
I don't know, Matty. I don't know. Maybe
multiple ore bodies now. I think they'll be looking to bulletproof, and they're not doing the exploration decline, so they're putting all the money into the drill bit, and they want to obviously prove up as much as they can.
Every company, Matty, that doesn't make cash flow has got a raise coming.
Will it be coming sooner rather than later?
I don't know. Clarification on a prior episode. I got one to talk about. So we had a discussion.
Ding ding ding.
Oh, another ding ding ding. Yes, yeah. So we had a discussion about the total shareholder return threshold for St. Barbara's FY24 performance rights. We have been reassured that the TSR hurdle in the performance rights requires a 20% total shareholder return each year. So each of FY24, 25 and 26 for 100% of them to vest rather than 20% cumulatively over the three total, i.e. 6.3% per annum. So despite what's been insisted as our misinterpretation, I'll let the astute money miners form their own opinion. If they want to do some homework based on the publicly released information, we did ours. Nonetheless, I'm glad the real goalposts for TSR are higher. As a begrudging SBM shareholder, it's good to see.
You'd be the least begrudged because you bought $500 real late. Righto, Trav. Good stuff, mate. Thanks to all the sponsors as always. We had Terra Capital, our great friends at the top of the show. Also, Smec Power and Technology, Anytime Exploration Services, JP Search, the financial recruiting gurus, and the RC drilling experts and the employer of Rhino Sullivan. That's all you need to know, K-Drill. Thanks for all your support of Money of Mine, and we really appreciate it. Cheers, Ricardinho. I'll be down at Southwest Connects, bloody Wednesday, Thursday, the conference down Busso.
Beautiful.
Grab a beer with me.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.